Hi guys, welcome back to the channel. My name is Dave. This is Wealth Adventures, where we talk about wealth, and today I want to do a review of my M1 account. I've had it open now for about 18 to 20 months. It's done fairly well. I just want to kind of show you and illustrate what the power of dollar cost averaging can do, paying yourself for some of the principles I like to preach. I've got four. We'll talk about all of them. Give you a rundown of my portfolio. Hopefully I can get you to kind of buy into this idea and trust the market enough that you can start putting some money away so you can grow your wealth. So if that's what you're looking for, please stick around. Whoop! Okay, real quick, what is M1? M1 is a brokerage account. You can see my default view right here when you log in, but it's very easy to set up if you're new to this, and there are plenty of videos out there that show you how to walk through this and get this set up. Enter some information, and you'll be up in no time from the comfort of your own couch. You can invest using your PC or your phone. Easy to get money in there and out of there. And, it's just a great little app that you can use. And now it uses this pie idea, again, real quickly, to fill out this pie. So the idea is you're going to have different buckets, and it's going to fill out this pie based on a percentage that you like to put into each section of pie. So you'll see that I've got ETF chunk, dividend, miscellaneous, those types of things where you can go, and it'll automatically adjust and rebalance your portfolio as you commit more funds to this account. So one of the great things that this has over like a Fidelity where let's say you get a dividend in Fidelity, and it's going to either auto invest that back into the same equity, or it's going to put it back in your core account, and then you have to go and physically put it back into some stock that you like. Well, with M1, it's going to take that cash, put it back out here, and it's going to rebalance your portfolio each time by picking the piece of pie that needs a little bit of money put to it. So it's a great little way to keep yourself nice and balanced, and one of the great reasons that I like to use M1. Bottom line, I think with M1 is that everyone can do it. Everyone can go out and grab an account with M1 and start doing exactly what I'm going to be doing here today and what I'm showing you. So I guess if you just start looking at my portfolio, the first thing that I'm excited about is that I did hit the 6-digit milestone recently, right? I hope to make it to 7 in the future, and at some point use that, to probably skim off the top a little bit some of those dividends that I get and use that in my everyday expenditures. So that's my long-term goal. But, for me with M1, I'm always preaching the same 4 main principles, right? I like to say I like to pay myself first, and that simply means that when I get a paycheck, I take some of that paycheck first before I do anything else with it, before I go to get that sushi dinner or anything else, and I go and I invest it in my future self. I go put it into M1 or Fidelity or some other brokerage account that I have, or into real estate, or back into my business. So I'm committed to doing that every time, and that's why I've hit this 6-digit number. I also like to know exactly where money's going, so that's kind of principle number 2, which is basically means have a plan and a budget, right? So those are just the first 2. Third one is to live below my means. So I'm always trying to find ways to live within my means so that I can do this. And the fourth one, the most powerful one of all, utilizing the power of compounding interest. So you'll see now this value over time, the big blue block right in the middle, we see that it's gone up. Even through the downturn last year when COVID struck and everything kind of went kablooey, you don't see a big drop off because I was committing more money to M1 and my other investment portfolios, and it kind of just continued to go up. So there wasn't really much of a reaction. And I've continued to invest, or dollar cost averaging, simply meaning putting money in every month. I've got a video, I'll link that above, that it kind of explains it, why I get excited when the stock market corrects, and why this thing continues just to climb and work for me. So if you follow this line, there haven't been a lot of downturns, and that makes me sad a little bit because I like those. I like the big corrections because I'm not too old yet to not like a good correction where I can commit more funds into there confidently, because I have the confidence that over time this thing's going to go up and to the right. But right now, we've been in this crazy trend where it just continues to climb up and to the right. So at some point a correction is coming, but that does not scare me. That does not worry me a bit, because that's just a buying opportunity for all of us. So just overall, I'm at $102,000 now, and I've had almost a $20,000 gain, which is about a 40% return for the lifetime of this account. So that's incredible, not because I'm incredible, just because the market has been in this uptrend for this long period of time. I don't think you could select 4 or 5 ETFs over the last year and not be positive. If I challenged you to find 4 or 5, I don't know if you could do it at this point with this market. So it's been a really good, strong market, and hopefully you were a participant in it. Now on this channel, we talk a lot about options trading. That's kind of been that's trending on Wealth Adventures here, but I'm not all about just trading options. You know, I think for my core accounts, I have my long-term holdings, just like you see here, and I don't change those very often. One thing that I did do recently, though, was I got rid of all of my airline stocks. For me, those were completely a recovery play. They were so beaten up that I bought into them. They all doubled in value, and I waited a year for tax consequence reasons, and now I got rid of them. So now that I see it pulling back, you know, and I've owned them for over a year, I figured it was time to roll those gains into other items that I feel will be better positioned for the years ahead. So I got rid of that section of pie, and that's fine. You can get rid of sections of pie because I'm not a big believer in airline stocks in general. Just thought it was a great recovery play. Now I'm going to use those, and I'm putting them back in to all my other pieces of pie. For me, how I have this broken down is I've got several different slices here, from my ETF chunk to my tech chunk to my staples chunk, financials, real estate. You can kind of see how they've done. They've all performed pretty well except for oil, which is a very small percentage of my portfolio. But overall, the market's done exceptionally well over the last, you know, period of time since COVID. If you were in there, you're going to do pretty well. So I'll go into my holdings, but you know, it's just how I decided to go about this. You could all be in ETFs. You could have just 3 to 5 ETFs and be done with this thing, turn and walk away. Again, I'll link another video above of a video that I did about having a very simple portfolio and not stressing about this. For me, I've always bought individual stocks as well as ETFs, so I feel comfortable in that arena, especially when I get broadly diversified. I'm so broadly diversified at this point that I pretty much own the market anyway. But I do have some that are, you know, larger portions of my portfolio. Not necessarily in this M1 account, but in Fidelity. So you do end up a little more concentrated here and there. But anyway, my holdings. So if you go in here, again, the only thing that I've sold over the last 18 to 20 months since I've owned this thing has been the airline stocks. Everything else I've kept, and I haven't really switched it out, and they've just gone about performing, and I ignore them and I just keep investing. So look at this. Crown Castle has been my biggest one, and it's one that I had from day one, and I put a big chunk in there along with Welltower. Initially when I set this up, I was trying to collect dividends, but I am in a very high tax bracket. So for me, dividends aren't a great thing right now. I like them. I like companies that pay dividends, and in the future date, it's going to become more and more important. But for right now, I can take them or leave them. I got Royal Bank of Canada, Vanguard. You know, I've got a lot with China and emerging markets in Europe and stuff like that, because I don't have that exposure so much in my other accounts. And I don't feel comfortable buying individual stocks with these guys so much, so I invest that way. Now, China's been beat up a lot recently, but that doesn't mean I'm going to stop investing. I'm going to continue to invest over a period of time, and I imagine that's going to come back with time. A lot of these are what you'll find in a lot of baskets of what people would own. I've got some REITs in here. I've got banks. I've got American Express. I've got Google. Google's done very well. You kind of see the position there, and it's gone up, what, 83%. Pfizer, Johnson & Johnson, CVS. I'll just rotate down through here really quickly, kind of see what I've got. Doesn't mean this is what you've got to own, but you can kind of see with owning this many positions, I've got 47 altogether, that I'm pretty diversified in this account. The one that's gone up the most is one that I'm not a strong believer in, which is Tesla. It's up over 300%, and I wouldn't tell anybody to go out and buy Tesla because I think it's overvalued. I think you're buying Tesla for 2028. It's 2021. I happen to work in the automotive sector with Honda and Toyota and products like that, and I just don't fully see it. But obviously I was wrong. But so I've got a little bit of exposure to Tesla, but you know, that's just my take on that one. But yeah, everything kind of rose down here all the way to my smallest holding, which is $166, or I'm sorry, $379 of Airbnb. Again, this is one that I think in 4 or 5 years could be quite valuable right now. It's dropped I'm down a little bit. So that's that. That's my portfolio. I'll scroll down here slowly in case that you want to see anything, or if you have any questions on any of it, you can ask down below. Why is that in your portfolio? Are you nuts? Or any other comments like that. So that's my portfolio. Get in there, set one up, start investing. But yes, I'm a very firm believer that with time on your side and you paying yourself first and you dollar cost average into these stocks, you have no fear, no reason to be fearful of the stock market. Any big correction is great because you'll be able to buy all those stocks you like or those ETFs at a cheaper rate. So get out there, start investing, grow your pie, celebrate when you get to 6 digits, set milestones and goals, and we'll see you, I don't know, somewhere fancy, somewhere where fancy wealthy people go. All right. Okay, so there you have it. That's my review of my M1 account. Like I said, I think I'm doing pretty well with it. Hopefully it'll continue to proceed that way, but you never know with the market. And as we know, if the market dips, we're happy. We'll buy more when it dips, right? But it doesn't have to be M1 either. But I encourage everybody to go out and open up a brokerage account. Get started today, pay yourself first, dollar cost average, all those great things. You know, if you do decide to use M1, I have an affiliate link down below. You can use that, follow the instructions. They'll give you a nice little bonus into your account at the beginning. They'll match that to my account. I will donate all those proceeds, promise, to a good worthy cause at the end of the year. I've already received a few, so we're getting that pot together there to make that donation at the end of the year. So if M1 does not fit with what you want to do, then definitely do not do it. But if you decide to, great, it supports the channel, and hopefully we get to help some people out along the way. Please like and subscribe to the channel if you haven't done so already. Ring the notification bell, all that great stuff. I really appreciate you watching. Have a great night. Take care. Whoop!